Alright guys, so today we're going to talk about a specific topic that most people find very unsexy. It's the one that mostly no one wants to focus on because it's not technicals, it's not indicators, it's not easy to understand. And the reason it's not easy to understand is simply because it has to do with you. It has to do with your personality, it has to do with what's in between your ears, it has to do with your risk management. Now, this is going to be in a podcast format. We're going to do very little technicals here because it's not about the technicals. Here's a secret, and here's something that took me a long time to understand. You can be a great technical trader. You can understand your price action. You can understand every single thing I taught you. But if you cannot control your greed and you cannot control the plan out of a trade, which is the protection of your account, the protection of your liquidity, and how you're going to approach each and every single trade, you will ultimately blow every single account that you fund. And it is a very possible thing. Don't think that because you've been doing this for a certain amount of time, ultimately your skill will outweigh your risk management. It's not going to happen. You can see the market perfectly, but you will eventually lose. Everyone loses. So write that down. You will lose. You will lose. Now, like I said, this video is going to be in podcast format. I'm going to do a lot of talking, and we're going to drive this point home for those of you who seemingly love to ignore the risk management aspect of Forex. Let me tell you this. You will lose. You will lose. You will lose. You will lose. Everybody loses. I lose. The banks lose. You take risks on trades and there's drawdowns. Remember, we are the little fish. On the first day of you going through this coaching process, I tell you this very clearly. We are the little fish. We are nothing. We are not millionaires. We are not billionaires. We're not major corporations or institutions with 700 traders under us trading the same assets and pushing the market in one direction. We are just sitting at home, going along on our $1,000 account, $10,000 account, $20,000 account, still nothing. Okay? So you have to understand that. You have to humble yourself and stop thinking that because you understand basic concepts and you've won some trades and you've grown some accounts from a couple of hundred to a couple of thousand and you're living off of Forex. Stop thinking that you're something. You're still nothing. I am still nothing in this game of Forex. And because I understand that I am nothing, I know how to protect my accounts. I know how to protect my liquidity. I know how to humble myself and not take things personally on the market. So we're going to drive this point home right now. Let's start with that. You're going to lose. So if we understand that we're going to lose, we also understand that we can't let a couple of trades destroy our accounts. Now, you can think to yourself, well, it's only a couple $100. I'll just work this week, do a little overtime, and then I'll have a couple $100 here to refund the account. You can think to yourself, it's only a couple of $100. I would have spent this on clothes or beer or food or God knows what else. You can think to yourself many things. But the important thing to understand when you have that type of mentality is habits are really hard to break. And the more greed-oriented trades you take, the more less Forex intelligent trades you take, the harder it's going to be for you to realize that what you're doing is wrong and stop giving in to your basic human nature of just throwing trades into your account, just launching them in there in hopes that they're going to go your way. So, you know you're going to lose. I mean, how many times does somebody have to say it? How many times do you have to experience it? It is extremely illogical to think that in a market where things like Wix and random noise candles and news and surprise news from things that no one expected in the world to happen and it affects the market, it's illogical to think that you're always going to be on point. It's illogical to think that with the way life is, you're always going to be on point. With the way we are groomed to treat money with a sense of fear and greed and just this love for the dollar, we're always going to be on point. So what do? How do we control ourselves? First things first, why are you here? Why are you here? Are you here just to make money? Obviously, we all want to make money. Are you here with proper expectations? I would say if you're working with me, you should be. It is not about what you did today. It is not about what you did this week. It is about what you did this month. It is about what you did this quarter. It is about your next 1,000 trades. It's a cliche saying in Forex. It's not about one trade. It's about 1,000 trades. You're here to build a skill. The skill is what brings the profits. I don't know if you have to tattoo that on yourself or write it down on a million pieces of paper, but the skill brings the profits. A lot of the times what I see is people raising their risk. So let's say, for example, they have a $500 account. Now, I am of the belief that you should be able to risk whatever you're comfortable with. That's a key thing right there. You should be able to risk whatever it is you're comfortable with. So let's say you have a $500 account and you're comfortable at trading $5 a pip, split up into multiple entries or a single entry, whatever it is you wish, and you're comfortable doing that. Now, that doesn't mean $5 in the GJ, $5 in the UJ, and $5 of GBP USD. That means at one time, as a whole, the most you're ever risking is $5 a pip on that account. If you're comfortable risking that, that is, by the way, very high, very aggressive trading. But if you're comfortable doing that, by all means. Now, what I'm comfortable with and what you're comfortable with is probably very different. There are traders out there that have been trading longer than me, that make way more money than me, and would never trade at that high of a risk. There are traders out there who trade comfortably at that 100 pips of space. There are traders out there who need 300 pips of space, 500 pips of space, meaning that on a $500 account, the most they could ever trade is $1 a pip total at one time. It depends on what you're comfortable with. Now, what you don't do, you don't revenge trade. Your trade is negative, and all of a sudden you lose that trade, and then you're really pissed off, and you just throw in another trade, and another trade, and another trade, and you're scared, and you're sweating, and the market is doing, one of these standstill candles, and you don't really know where it's going. You're unsure, and you cut it, and then it goes up, and you cut it again, and then it goes down, and you cut it again. You don't know what you're doing. And right there in that moment, you're worried about one trade. Every trade you take should feel meh. It should feel it is what it is. You analyze your trade, you break down your trade, you let the trade go, and you move on. Where I see people, how I know people are not on the right path is how they respond to that day's trading after it's all over and during a bad moment. So you're going to lose and you're going to start focusing on the next 1,000 trades. But Gustavo, I want to make money. I'm here to make money. I'm here to make money. I just want to be able to do A, B, and C, and then I want to make money. I'm sorry, but let's be logical about this. Something that really gets under my skin is when someone's like, I just want to be like XYZ student. If he did it, I know I can do it. Well, everyone's life is different. That's one. Some people, they work from home, so there's more time to watch the charts. Some people, they have no families, they have no jobs, they have no responsibilities, they're really young. It's easier for them to watch the charts. It's the truth. Some people, they grasp onto concepts very fast. Some have no attachment to money. Some have so much money that it doesn't matter what happens, whether they lose money or they win money. They're just there to learn the skill as time goes on. It's something that I tell people in the beginning. You have to treat this like a hobby. You have to love this. You have to love the process of embracing this skill and learning this skill. And those are the people that do well because they are not attached to the profits. They are attached to the skill. They want to learn out of every single trade something. They want to learn more and more about Forex. Now, that doesn't mean more indicators and more systems and more blah, blah, blah. I can make your money. I can make you easy money. No, that means learning price action, learning trend lines, learning EMAs, learning supply and demand zones, learning order blocks, learning this, that, boom, boom, boom. Everything price action oriented. They would watch every single video I send them. They send me every single trade they take. They make sure that we have a conversation every single day. Do I provide them the most insightful thing every day? No. But it's just about being in the fire, being around the fire. Making sure that every day is a Forex day, even if it's for just an hour. Some people, they take breaks in the middle, weeks and months, and then they come back and they think that things are going to be all perfect. Some people do the same thing every single day that's wrong and do not understand why it is they're losing. They send me their trades and they have a $500 account and they're taking $5 a pip, standard trades, 3 standards on some accounts with that thing can barely hold 7 pips of drawdown before it blows. Everyone is different. So let's start focusing on what you have to do and just try to do that consistently. So you're going to lose. You're going to focus on the next 1,000 trades. You understand that you're here to embrace the skill over profit. All right? The only reason people blow accounts is because they're so busy thinking about making that money that they're losing money. They're so busy worrying about this one trade, this one day, this one trend, this one chart, that they're ignoring all the other charts. They're ignoring tomorrow. They're ignoring the fact that they're so over leveraged on this account that this thing is barely holding. The reason we really talk about the skill over profit, it's not just supposed to be some cliche saying. It's supposed to increase your confidence. When you truly have this skill, one loss does not deter you, does not scare you. A bad day, a bad 2 days isn't going to really affect you. If you're having a bad week, a bad month, maybe at that point you start saying something is wrong. I'm doing something wrong. I need to go back to basics. That's why we keep it simple. That's why we keep it simple. You have to understand, and I think I've said this a million times already, but I'm making sure I'm saying this enough so that there is no way that anything could be misunderstood. You have to understand why it is you do every single aspect of your trades. Nothing should be, that's why I don't believe in indicators. That's why a lot of price action traders and people who have been around don't believe in indicator-based systems. You have to understand why it is you're doing what it is you're doing on the chart. So let's talk about that. Now we're going to start actually working around the chart. When you first start, I make you do a 30 pip concrete stop loss. No matter where you are on the chart, I make you do a 30 pip concrete stop loss. So let's say you were here and I tell you you're doing a 30 pip stop loss. You enter over here, so your stop loss would be somewhere down here. All right, as you can see, the middle of that says 304. That's 30.4. So you would be somewhere over here. Okay, boom. I also tell you that when you're up 15 to 20 pips, you are to place a +1 stop loss in profit. All right, so once this trade had gone up 20 pips, boom. 20 pips, boom. Now, if this trade would have worked out perfectly here, and then if you would have let it run, it would have taken you out. If you would have entered here, if you would have let it run, it would have taken you out. If you would have entered here, there's your nice trade, 80-something pips. All right? Now, by the way, I know questions are coming up and people are saying, "Ooh, I see what he did there. There's a lot of wicks. I see what he did there." We're going to talk about that on all these other videos you're about to watch. And if you've been around, you've seen this in other videos and you understand. And if you don't, I will be creating another video after this that's going to be a list of price action steps. So that'll be coming out by the end of the year. All right? But I digress. I want you to understand that in the beginning, you get these solidified rules to help you really let trades play out. But as you advance as a trader, things are going to change. As you grow as a trader, you're going to change. The concepts stay slightly the same as far as it's a routine, it's a robotic action. You're just going to be doing things over and over and over that you fully comprehend, and nothing is going to be left up to your emotions. So when you start 30 pip stop losses, plus ones when you're in profit. For the people who are brand new, plus one means that once your trade is in a profitable margin, you can actually drag your stop loss into your profit zone. And it's seen as you're protecting your trade. All right. In reality, what I'm doing there is I'm protecting your emotions. I'm stopping you from being too human when you're brand new. All right. So 30 pips stop loss, plus one in profit, and then cutting your trades at about 20 pips. All right. On your first couple of days, I tell you at 15 to 20 pips, take your trade, take your trade, take your trade. Why? Because 20, 20, 20, 20. You feel good about it. You know it was possible if you're targeting correctly at this low. Boom, good to go. All right. It's the beginner's ball rolling mentality. It's how I learned. You learned little basic foundations. Now, what mistakes start happening here? Here are some of the mistakes. You start wondering, I want to take 100 pips. It sucks that I took 20 pips. By the way, that's my crybaby voice. It sucks that I took 20 pips. I only took 20 pips and this thing went 100 pips. I could have made so much money here. Mistake number one. Money. Money. Nobody cares how much money you would have made, because the same $10 or $100 you would have made here, somebody else made thousands. So be quiet. Appreciate the fact that you were able to take 20 pips twice, 3 times. Appreciate the fact that you had a good set of trades. Appreciate the fact that you may be starting to understand something. Break down the fact that you knew or you understood that this became some sort of support level. That this level right here was somehow important. That this area right here was once the high and then it became the low on the bodies of the candles. Appreciate the fact that you were able to profit. Stop thinking about the money. Move forward. Okay, 30 pips stop loss, plus one stop loss in profit, cutting trades at 20 pips. And the other thing that I have that I get pushback on is the fact that you're taking 20 pips on a trade and 30 pips on a stop loss. I fully understand that it is not a one-to-one ratio. Rule number one in Forex, you got to have an even profit to risk to reward ratio. If you were taking 20 pips here, your stop loss would have to be 20 pips, which honestly still would have worked out. But in the beginning, I don't care about that. In the beginning, I am just trying to teach you to protect yourself from yourself. I'm trying to teach you to let things play out. I'm trying to teach you to target price. I'm trying to teach you not to react to the momentum of the candle and then enter here and then it takes you out and you're like, wah, I don't know why it's not working. When you knew that the ultimate area to get in was somewhere over here, right? I'm trying to teach you to be patient and target price and let things happen so you can see how the market moves. Now, you cannot survive that way. You cannot survive at a higher risk than your reward. Because if you have a bad set of trades, you start canceling out a whole lot of profit, and it's a whole lot of climb back to bring your account back to where it was. So after you get out of the beginner phase, now you're live, now the things are going, your juices are flowing, you've been winning a lot. What are you supposed to do? Now, I think I've said this enough, but first things first, by now you should know what you're comfortable at risking. What you're truly comfortable at risking. If you have a $500 account, what is my suggestion? My suggestion is that you start at no more than $2 a pip total of risk. That can be split up into 4 entries of 50 cents. That can be split up in 30-cent entries amongst multiple pairs. I don't care how it's split up. But you have to know what doesn't affect your emotions, what you're comfortable with losing. So your risk has to be understood. What you don't want to do is just throw around numbers. You know, I got a $500 account. I'm going to do $3 here, $2 here. That's going to make me $500. And then this one's going to go 40 pips. And I'm going to make this and I'm going to make that. BS. What you have to do is find a number that you have no problem with losing. Because things are going to change here as you become more advanced. The concrete stop loss becomes more about placement. And this is going to help you understand your entry as well. I come to the daily chart. I want to take a buy because the market has been retracing up. All right, I want to take a buy because at this weekly level we've had some major respect. At this weekly level we've had some major respect. Let me just bring it to the weekly, right there. Boom. See that right there? All right. I bring it to the daily, and now I'm like, all right, I really don't think it's going to get down here right now because of the fact that we've swung up a couple of times. It created a lower low, gave me a wick, blah, blah, blah. So I'm trying to get in, at the very least, somewhere in this zone. Right there. Okay? I want to get in somewhere over there. It was a low of it was the body low of yesterday. It doesn't matter, man. This is not a technicals video. Let me just do that right there, and then we come over here. Okay. Period. So I'm trying to get in. If I'm going to take a buy because I am spooked at the fact that this is a lower low, and I think the pressure of the market's going to go up, and then I see this wick, and I'm still trying to take a buy, blah, 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 blah. I got to, once I enter here, normally you would do a 30 pip stop loss. But where would I place my stop loss? I would place my stop loss right here. I would place my stop loss a little bit under the last place of strong retracement, which was right here. Not down here, somewhere up here. Why not down here? Because I believe that once this market travels down here, if this breaks cleanly, I'm definitely going to get tapped out, and it's a big loss. It's a big drawdown. Why let it happen? So what I like to do, and what I recommend for anybody who's now comfortable with the skill and understands, and by the way, here it makes sense because of this right here as well. What I like to do, and what I like to do for my stop losses is it's a placement thing. So I like to teeter somewhere in that 25 to 35 pip range, sometimes 40, on something where I'm going really long. Like this week, I posted some trades that went hundreds of pips. On that one, I may have had a 35 to 40 pip stop loss because I really didn't want to get wicked out of that market. I didn't want something like this to happen to me. All right, so on something like this one, where I believe that this lower low is going to hold, maybe I think that if it breaks anywhere under this price level, I'm going to be dead in the water. What I would do is I would try to get as low as possible over here, right? I would try to get somewhere down here, and my stop loss would go somewhere right there. Somewhere in this general vicinity, okay? Which would put me at about 25 pips. It's only a difference of 5 pips, Gustavo. What does it matter? It matters. If you were trading at 100 lots, it would matter to you. Because it's a dollar, it may not matter to you. But remember, it's not about the risk, it's about the skill. So let me go over that one more time. Start thinking of your stop loss in terms of placement, which means that you have to get so close to a level that you're comfortable with that your stop loss can be 20 to 25 pips, and you're still comfortable with that stop loss because you got so low or so high on something that you know that's about it. And if it goes any lower than that, it's going to break anyways, and you would have lost that trade anyways. So normally when you start, and if you're still a beginner, I still want you to do this, 30 pips concrete stop loss because you're learning. But once you're no longer new, and now you're comfortable with what you're doing, and you really have come to understand the candles and the wicks and your trend lines and your EMAs and why we mark up the Kazis because they are important prices in the market that have swung or broken at some point. Once you understand that, now your stop loss becomes a placement thing. And since you want your stop loss to be as small as possible, 20, 25, 30 pips, you have to get as close to your desired price, as low to buy and as high to sell, that now you're targeting even better and your stop losses are even smaller, and your trades, when they go 20, 25, 30, 40, 50 pips, you are now working in the ratio realm of 1 to 1, 2 to 1, 3 to 1. I'll say that one more time. When you target price really finely, you actually are waiting for price to get to where you want it to go. Your stop losses will be even smaller, and your ratios will start to even out. 1 to 1, 2 to 1, 3 to 1. Proper targeting of price. But Gustavo, that's my crybaby voice one more time. But Gustavo, I don't want to sit here and wait for it to get to my price. Do you expect me to sit here for the next 2 hours and wait for this to get back to this low? I have life to live. I have to go watch The Walking Dead. I have to watch Law and Order. I got to wake up in the morning and I need my 11 hours of sleep. Okay. What you can do is you can do right click, trading, buy limit, boom. Once that trade comes all the way down here, or obviously we're down here, or down here, it'll execute this order. And what you'll do is you'll have a stop loss set already for it. So you'll modify. Modify. I should have done that before, but it's okay. All right, and then you'll place your take profit, however it is you're looking to do. All right, so I said I want to go down here somewhere, 26 pips SL. That would have been my trade. That trade would have been good to go. I would have placed it like that because of that trend line, even though it was drawn kind of but it doesn't matter. And let me see. Yeah, we would have went just like that. All right, it would have been something along those lines. You have to understand that as you advance as a trader, you have to plan out your trade and just let it go. You can't sit there and stare at every single tick of the chart. You can't sit there and think that you have to revamp everything. Things that get under my skin. And things that should get under your skin as a trader. The person has been trading for a couple of months. They have a bad set of days and then they want to redo everything. Everything, nothing is working. They don't know anything. They ignore the good that they have done. A lot of the times when people are having a bad set of days, all you have to do is look at their risk. That's what I do. That's the secret. That's the secret to the coaching. I look at the risk. It lets me know exactly what they're thinking. One trade is $1 a pip. The next trade is $3 a pip. Then it's 50 cents a pip. Then it's 10 cents a pip. It is all over the place. It is a buy. It is a sell. 5 pips, 6 pips, 20 pips. They take a 40 pip trade over here, and then they take a 7 pip trade over there. All that stuff, no good. Consistency in the action is what matters. Consistency in your approach is what matters. So we set our stop loss, we set our trade, we set everything, and we let it go. We have to have the confidence that if we were sitting here watching this, we would have entered this market anyways. It is what it is. If you're looking to sell, you would go trading, sell limit, and then you would do the same thing. You right click, modify the order, you set your stop loss, you set your take profit, you let it be. If you're looking to sell under this market, let's say you want to see a break of this area over here, or let's say you just wanted to sell from here, but you don't want to wait for it to come back. You would do under, and that is considered a sell stop. And if you wanted to buy on the way up, let's say, which would make more, if you wanted to buy on the way up here, you would go here, buy stop. Oops. All right. Now, orders. Orders are going to help you from sitting here and just spending hours and hours on end. Now, as a beginner, you should be happy that you're able to sit here and watch the trades, the market play out. You want to learn that the market moves in waves, right? So you want to respect those waves, and you want to use things like EMAs and things like trend lines if you want to do that. I make that an option for people. And you want to be able to bring up the line chart and draw some lines and really break down this market. Right? And really break it down. And really look at the way things are supposed to happen. And you just want to be someone who really embraces the skill of trading. I can't even look at this. This is too busy. At the end of the day, guys, it's about the skill. So, like we said, we're going to start, as you become a more advanced trader, as you really start to approach the market with a sense of skill, you're going to start letting your trades fly, because one trade is not the make or break of you. Now, what does that also protect you from? From you entering the market a bazillion times and wondering why it is that you can't win consistently. I don't know what I'm doing wrong. I'm doing everything you said. I marked up the charts. I marked up all the lines. Crickets. That's crickets. Guys, smart, intelligent trading. So we're going to start using orders. I'm going to start really making people use orders. I never was a fan of orders, because if you don't understand how to target correctly, then you're just going to get smacked around the market. But once you have understood, highs and lows, proper placement, you understand when the market is trending a little bit, even if you're sitting there, you should think about doing some orders. You should think about giving it a test trial. Oh, but I don't want to learn and lose a lot of money. Okay, do them at 10 cents a pip. You got a $500 account. Do them at 10 cents a pip. Oh, but what if I lose money? You're going to lose $2 on a $500 account. You're going to be okay. You're going to lose $3 on a $500 account. You're going to be okay. You're learning. You're learning in a real live market. You're learning, period. So start targeting with some orders. If you have a problem with greed and you have a problem with emotions, take the emotions out of it. Set some orders. All right? Cutting trades at 20 pips. I used to be someone who, and I still am, I still take 20 to 30 pips. This week I took the UJ, and the UJ downtrended strongly. Let me, let's go. Okay. UJ downtrended strongly, and I put up a screenshot where I took downtrend for multiple swings. And it was pretty nice. All right. I got in here, I got in here, and I got in here, and then I exited everything out here. Okay. The way I did it was pretty simple. I had orders up here. I did not manually click into this. It was literally impossible. I had orders up here. Trade goes down 30 pips immediately, and then I just let them be. This comes up here, and then those executed, and then I just let it be. Now I actually had a stack here. Why? Because if I look left, oh, look at that. 1, 2, 3. It held. My stop losses for this was right here. It was nothing. It was like single-digit pips. All right? And then the trade goes down, and then it comes up. I did the same thing here. My stop losses for these. Oh, what is this? What is this? All right? So my trades are running. The momentum was strong. I just look at it level to level. One level there. The next level here. Okay, now once we got down here, I look left. 1, 2, 3, 4, 5. Okay, let me not continue this dance. Let me end this game. 1, 2, 3, 4, 5, 6, and then I'm here. Yeah, it's over. Okay, stop losses were just placed on placement. These were high risk trades in my mind, but I'm going long term. I want to scalp my 40 pips, my 20, 30, 40. As I come down, I stack order here, boom. Stack order here, boom. I still have some entries running. Everything is great. I took advantage of the whole trade. All right. Stop losses are small, just in case, and that's it. So using orders is actually a very powerful tool. Cutting trades at 20 pips, it's a great way to learn. It's how I learned. It makes you very comfortable in the small medium of the market. As your trade is running, you can drag your stop loss along. Now, the +1 mentality is more for the beginner to protect their trade. It's more for the beginner to protect themselves from themselves. Eventually, +1 becomes less about fear of losing money and more about just that's what you do. You let it run. Now, here's the drawback to +1 mentality. The problem with the +1 is that when you enter the market, you're entering from a place of highs and lows, right? That's a smart way to trade. You're entering from a place of highs and lows. So a lot of the times, like right here, let's say you entered here. That's 14 negative, by the way. You would have entered here 13, let's say 15 pips or whatever. It would have taken you out. You would have done it again. You would have done it again. It drew you back 12 pips and then goes positive 20 something pips. It would have taken you out. Right? You would have did it again. What, you should have been targeting a little lower since that's the low. But let's say you would have did it again from here. It would have drew you back for 14 pips and then it would have been gone. You would have never got plus 1 down. Well, actually, no, you would have not. Actually, yes, you would have. So you would have to enter again. All right. Here you would have had an opportunity for about maybe 110 pip, 120, 220, 320. Plus oneing, the problem with plus oneing is that the market likes to teeter in strong areas of support and resistance. It likes to revisit. The market makers also know, the ones that move the market also know that newbies like to plus one because of fear, not because of a sense of understanding the market. And then they'll retap and revisit, and then it goes away. Right? That's why you get those higher highs and lower lows. The picking up of orders, as they say, and the pushing out of newbies. So because you know that, the only time I ever plus one or put a stop loss in profit is once that breakout has happened. Once that breakout is established and this thing is gone and I have new support levels, so something like right there, supported here, and it's gone. At this point, I am dragging along, right? I'm bringing my stop losses with me. Very similar to this downtrend, right? The stop loss is small, and then as this thing is going on, all stop losses move to here, right? And as this thing is going on, all stop losses move to here, even though I cut it down here, but you get my point. So once you are leveling up as a trader, what are you supposed to do? What are you supposed to do? You are supposed to start thinking in terms of letting price breathe, letting things happen. Less worried about these 20 pips you have in hand, more worried about as this trade that you understand is going to keep going, what are you supposed to do here to manage your money, to manage your profits, to manage this trade, this series of trades? So, again, targeting your price better in order to make your stop loss smaller. Your stop loss should go in a place where if it gets hit, you're wrong anyways, right? Your stop loss should never be in a place, like for example, this is why I tell you guys not to get into momentum. Market goes up, you're like, oh crap, uptrend, out, and then uptrend. All right. Oh crap, uptrend, out, and then uptrend, and then really out, and then uptrend. Okay. Your stop loss should never go in a place that has been visited in most recent history a whole lot of times, because you are susceptible for the market to revisit that area. The market moves in waves. It moves in zones. It moves in zones. So if you know that, don't let them get you like that. Don't lose money like that. Don't lose your trade like that. Don't hit your skill like that. Don't spit on the skill like that. Because you must make money right now. Because you can't be patient. Because you just lost 2 trades and I gotta make my money back. Wait for the market to get to where you know it's ultimately gonna get to. And if you missed a trade because you were too patient, who cares? Are you going anywhere? Is Forex going anywhere? Are the markets going to shut down tomorrow or next week or next month? Appreciate the skill and trade for the skill and not the profits. When you do that, you will become profitable. As you grow as a trader, whatever little money you're so worried about right now, $50, $100, $500, that starts to come without you even worrying about it, because you now have this skill, because now you don't have to worry. But when you're so worried about micromanaging and all these little things and oh God, I lost this trade, I'm about to double up my risk to make this money back and then some, and you're thinking about the $1,000 you're going to make in this one trade because you're such a champion. When you do things like that, you have no hope for the future. Think long term with Forex. So your stop loss is no longer concrete. You're no longer dragging stop loss to +1 of profit just because you're scared. You're not just cutting trades at 20 pips all the time. If you're doing that, there's a reason I tell you guys to enter more than once. Split your risk. Enter more than once, because you can learn to take 20 and let the other ones run. Take 30 and let the other ones run. Right? You always have one that's going a little longer than the rest. You're maximizing the amount of pips that trade can take. That's how you learn. No, not all three of them are going to go the full 40 or the full 50 or the full 100. Who cares? You just took an entry for 100 pips. Because you had $3 a pip or $5 a pip or whatever it is, and you look at it like, oh, I would have made $300 on this trade, and because you cut two of them early, you only made $60 on that one entry. You look at it like, oh, I just lost so much money. Or you only made $100, whatever it is. I just lost so much money. I would have made $400 more if I just would have let them all run. But you're missing the whole point. The point is you just took an entry for 60 pips, and when you were used to just 20. You just took an entry for 40, an extra 20, and the rest of them went 20. So you just took a free 20 pip trade. You got to look at it in terms of pips and skill. This is not an ABC type of skill. This is a to Z type of skill. This is every situation is just a little bit different, so you have to control what you can and keep certain things the same. Your approach. And one-to-one risk ratio obviously changes as you maneuver the trades to bigger pip counts, and you learn to scalp and go. You learn to maneuver with the market. You learn to place your trades intelligently. All right. So we've spoken about a couple of things about embracing the skill and not worrying so much about the profit. Out of my years of coaching now, what's the most consistent factor for blowing accounts? Risk, greed. It's what blows accounts, greed. Over and over and over. I get the question, well, how do I stop myself from that? If I knew that, I'd be a millionaire. I can't stop people from being greedy. I can't stop people from having those lapses of judgment where they just lose it. They just forget everything they've learned about placement and targeting and using your EMAs. You know, if you're going to use your EMAs, right, and only entering, on the trend when they go to the higher frame, they see that we've been in some sort of buy pattern because this is holding. If you take a sell, you took the sell based off this. That's how I got my sell. Okay. If you take a buy, you use the weekly, the daily, the H4 to really tell you where you should be going. If you're using, let's say yesterday this was the last place of retracement, so then this becomes the last place of retracement, maybe, or then it's maybe this one if that one breaks. Patience, okay? If you understand that, and then when you go to trade and you take a loss, you just drop all that, there lies your problem. You have no self-control. I cannot stop you from doing that. I can provide you rules. I can provide you understanding. I can provide you, anecdotes, stories that explain what happens when you do those types of things. But at the end of the day, it's about you. It's about whether or not you really want to learn this, whether or not you really care about the money and I got to make all this money right now, or you understand that eventually by you building the skill, you will become a profitable trader, making more than what your expectations are at the moment. But it's going to take some time. Also, $500 for some people is nothing, and for others, it's a lot. And it has nothing to do with what type of person you are or your quality of life or nothing like that. Everyone has different responsibilities. Everyone has different understandings of their current scenario. So you have to just trade for the skill. You have to just trade for you. You have to have those blinders on and just focus on what you have to do. And that long-term mentality is what's going to keep you doing that. So let's recap some of the things we spoke about. Placement in the market. Price targeting is everything. You're using the highs and lows of the market. You're using the history of the market to your advantage. So if you are somebody who's taking 20 pips, take your trade and trust that if you're using the highs and lows of the market, it's probably going to revisit that area. Your risk. Always know why you're risking what you're risking. Always be comfortable with what you're going to lose out of that trade. If you're trading in the middle of the market using EMAs, aka trend lines, or you're using both, always let the market retrace to them so that you can use them to your advantage because you believe that the market is trending. Right? So like this example right here real quick. It goes to a high, creates a lower high, creates a lower low. It goes to a high, creates a lower high, and then creates a lower low. All right? At this point here, you got to stop doing this. All right? Once it goes under like that, that's it. It goes even higher, you try it again, it goes even lower, and then does it one more time. So right here in this area, there's orders, right? They like this area for whatever reason, and this is why later on I had to cut this trade. There was some sort of power for the buy here. But use that stuff to your advantage. If you were in a buy mentality, 1, 2. Right? Now, obviously, the mentality was wrong because we're going down. That's why I took a downtrend. Why are we going down? Because the same way they picked up orders here to take this buy, a shit ton of sell orders were picked up here to take this sell. That's because you hit a strong level of monthly, I think it was monthly or weekly resistance. There's a lot up here. This is the highest of highs. There's a lot of things going on up here. Automatically the market shoots down. It tells you there's some power here. So maybe you should stop looking buy. But anyways, that's how the market works. It works in these waves. The whole point of the matter is this. Your placement. Your placement is what matters. Your understanding of what happened in the history and targeting that. You are gonna start using orders. If you're somebody who manually can't control themselves, take the manual part out and leave orders running. If you're uncomfortable with using orders because you feel that staring at the screen makes your trades become profitable and protects you from losing, then use really low lot sizes that just can prove the concept to you. Not on demo, but on live. Okay? Your risk ratio will adjust on its own if your stop losses become even more squeezed due to your proper targeting, and your take profits start to get maneuvered as you go. You can widen them out a little bit, 30, 25, 30, 35, 40, 100, whatever it may be. All right? And I think that's it. When I made this video, I pretty much took as you guys know, I journal everything, the most consistent issues that people have. The greed, the insane amount of entries that people enter at. You know, I've seen something like 40 entries in a trade in a given day. 40 entries. I've seen people blow $5,000 accounts, and then we look at how much they were risking. They were in the double-digit standards, and if they would have understood that that's what they were doing, they would have never done it. But they were so caught up in the moment that they had no way of surviving that situation. I've seen people enter the market based off immediately what they see, no targeting, just entering. I'm just going to enter this trade because I got to take a trade, right? I've seen people miss a trade, and because they missed the trade, automatically they want to enter another trade. They have to. No way am I going to miss out on this one move. Makes no sense. So you got to start thinking in terms of skill, in terms of your next 500,000 trades. You got to start thinking, I don't care what I make on this trade. I just want to catch these pips. And then when your account is at a couple of $1,000 and you're now trading at a standard or $5 a pip or $8 a pip or a standard and some change, it's nothing to you because it's the same thing. It's just the pips. This is just how I trade. This is just what I do. So you have to make sure that every single day when you sit down at the computer, you follow the steps. What area do I want to get in at? What's my momentum of the market? What's my most recent high, my most recent low? Where are my markups? How can I help the understanding of this? Do I need EMAs on the higher frames? Do I need a trend line? Do I need some kind of horizontal support indicator, supply demand zone, a box, something? And once you start doing that and really only working off those key areas of the market, I'm not going to take a reversal here. If we've been going downtrend, I'm going to look for a sell. If we've been going uptrend, I'm going to look for a buy. Where does my current trend start from? Is it starting from a weekly point of view, a daily point of view? Did I hit a new high? Did I hit a new low? Could this be the strong retracement? All these things are things you consider, and it happens. But why are you in a rush? You got a target price anyways. So what's the rush? And once you start really breaking down a chart, you can look at more than one chart. You can start looking at multiple charts and leaving orders like landmines on multiple charts, waiting for price to get there. For those of you who are actually good students and have come to the end of this video, here's the last thing you can do. For those of you who stay home and you know, you're around the house, I understand that it's hard for you to leave the orders, so this is something else that you can do to help you if you're somewhere in the middle. If you like to manually enter, you also like to watch the market because you enjoy learning, you can just have an alert. Trading, alert. Once the price gets to that area, you'll hear a loud bell or a ring or whatever the hell you have it at. And that's it. You can change the price to whatever it is you want. Sounds like that. And it'll let you know when you're in that general area that you were looking for. Alright? We've went over a lot of different things. As always, I did not do this in an ABC fashion because Forex is not ABC as much as people want to make it A, B, and C. But if you're going to take anything from this video, everything stems from price targeting. Everything stems from the history of the market. Everything that matters is about the skill. What can you do most consistently to make you most consistently profitable? Stop reacting to this one moment, to this one day, to this 1 week, and do things with a long-term mentality. If you find yourself sweating out a trade and staring at that money count, you are over leveraging. If you find yourself trading at 80 pips of space, 50 pips of space, 30 pips of space, and you don't have that type of skill, and you know it, you are not in this for the right reasons. You are in this for some dream of turning a certain amount of money into a certain amount of money, and you don't give a crap about seeing yourself doing this 5 years down the line, 10 years down the line, 20 years down the line. If you want to become a profitable trader and this is what you want to do, then you, my friends, have to build the skill. Last piece. I always tell people, how would you trade your money? How would you trade your grandmother's money? Your grandmother's retirement money? How would you trade my money? If you worked in a bank, would you be able to show your client the history of your trades that you traded their money with and be able with a straight face say, this is why I did it, and even though I lost the money, this is why it made sense and it's within my parameters of what I provided you as rules? For many of you, the answer is no. Because the accounts, you could always fund them again. You could always redeposit. You could always just, it's just a couple $100. But those habits get ingrained into your trading style, and sooner or later, when that money becomes sexy again, when you hit that new level of money that you weren't trading at before, and it's even sexier, those bad habits start creeping back, and that is how you blow those big accounts. Your foundation as a trader is everything. How you approach the market, skill over profits, is everything. Targeting is everything. Breaking down the chart is everything. If you don't watch the videos, you don't want to learn how to trade. If you don't, at the very minimum, mark up charts, you don't have to trade them. Mark up the chart. Set a little box and let yourself know where you're going to go. Go to insert. Go to arrow. And just place a stupid arrow just like that to let you know that if it would have gotten to this area at any point, you would have taken a buy. If you don't enjoy doing things like that, then this is not for you. When you participate in a business, when you're an entrepreneur, the fastest way to profit is actually enjoying what it is you're doing. You have to, because everything has ups and downs. Everything has peaks and valleys. So during the tough times, you don't care because this is what you want to do anyways. And you would have done it for free if you had to. And that is how ultimately you make things look so easy. You make this so effortless, and everybody else is looking at you like, how the hell is this person doing it? And how do I know this? It's not from my own results. It's from the students that have been with me for 2 years, 3 years, and now they're profitable. They live off this. And they're the ones who, with or without me, they're going to be trading. I could disappear on them and they're still trading. They look for books, price action books. They look for websites. They read podcasts, things like that. They enjoy this. They try to improve their mindset because mindset is everything at the end of the day. And this is something that they found that they know can give them some sort of freedom. They can do from home. They can do even while they're still at their job in corporate America. It's a secondary strong income. And it all started because they embraced the skill. They love the skill. And that's it, guys. So on that note, guys, 2017 is about to wrap up this year. Finish out the year strong. Do your learning. Do your due diligence. Put in that work. Happy trading. Peace.